the function of IRA specifically to IRS codes and also internal processes. And one of the things that we're going to talk about today, the valuations. So just that's kind of what I do. Graduated from the University of Colorado. Go Buffs. We're having a great football year after 10 years of misery. And big Broncos fan. And yeah, so that's kind of who I am.
And you're in Denver?
I am in Denver.
Okay. All right. So this is our October SDRAFocus webinar. And our topic today is the role of the custodian in your self-directed retirement accounts annual compliance program. We have a few different objectives. One is so that you understand the role of your self-directed custodian in connection with your IRA compliance or your 401k compliance with regard to valuation, the various different reporting requirements, and account maintenance. And also I want to help you establish a schedule of annual events. We'll be looking at a bit of a calendar of annual events at the end of this so that you can see how it all fits together, and fundamentally address a lot of the frequently asked questions that we get. So without further ado, Yuck, would you, yesterday we had a conversation where you explained the difference between what Pensco does as a custodian and what a normal fiduciary does. Can you kind of talk to that point?
I can. So as a custodian, we take on a non-fiduciary role. Basically what that means is that we are a trust company that holds assets for the benefit of the IRA owner. The IRS requires that when you have IRA assets that it be held in trust. So we're the custodian who holds your assets in trust. So you cannot hold an asset specific personally and say, this is my IRA account. The IRS won't let you do that. In that role, we're very limited in the sense that we have responsibilities to the IRS to properly report transactions and to provide fair market values to the IRS, and that's why we will solicit that. But we do not look at or review investments for suitability or give any investment advice. That's a fiduciary role, meaning that somebody has a personal interest in what you do and your investments and will guide you and direct you on your investments. We don't do anything like that. All we do primarily is to make sure that what you've done is an asset that's acceptable, that the IRS allows you to do. And then we will review for administrative purposes from our side to see if it's administratively feasible for us to administer the asset or custody the asset. But it is the role of the fiduciary, in this case the IRA owner, to determine the suitability if this is an investment that you feel comfortable with, that you feel like it's worth your time and your investment, to make sure that you know who you're investing with, to make sure that there's no prohibited transactions taking place by you investing IRA money into this investment. So that role is specifically on the IRA owner or the fiduciary.
Okay. Yesterday we had a conversation about the reason why Pensco added the special advisor requirement when an IRA or a retirement account and or its owner own 50% or more of the entity. Can you kind of go over the history of that?
Yeah, so the reason why is because, like I said, because we do not take on that fiduciary role, we can't advise to let you know if the investments that you're doing within your, say, for example, in your single member LLC is something that's allowed by the IRS. We can't comment on that. We won't comment on that. So a lot of times, a lot of people get this idea of wanting to invest in a single member LLC or an investment, and they're not 100% sure how it fits in when they're the primary owner or the majority owner. So we ask that you get a special advisor, somebody like Frank, to help be able to provide you guidance and say, you know, before you invest in this, or you're going to say you have a single member LLC that you're going to purchase a real estate property in, you could talk to Frank and say, my mom is selling me her home and I'm going to use this as a rental property. What do you think? Pensco can't make a determination and say, hey, you can't do this, or you can do this, this works for you. But Frank could give you that direction and guidance. So that's why we ask that if you are doing investments within a member LLC or LLC where you are the managing member of, that you consult with a special advisor that could give you direction to make sure that what you're doing, the transactions that you're doing, are not prohibited transactions.
Okay, so let's move on to some of the questions. And this first set of questions is about valuation. And the first question we always get is, how do I value my LLC units? Because people get a request for valuation from Pensco, and if you've got investments inside an LLC and your retirement account owns 100% of it, which is the easy one, or if your retirement account owns part of it, which is not necessarily so easy, you want to know how to value those units in order to comply with Pensco's request. We'll talk a little bit about why they're asking for that, but the first question is, well, how do I do that? And let me just, I'll go back to that screen, but there are really two levels of valuation. The first, of course, is the level at the entity level. So the assets that are inside the entity have a value. Of course, cash, we know what the value of that is. Real estate, you'll generally have a general idea of what that is. If you're relatively close to the purchase date, then you'll probably figure out that the real estate value is that. If it's been held for a while, you might want to check with the value on that. There might be furniture, fixtures, and equipment and other assets inside the LLC. And so, you know, those things have to be valued first. And then the IRA or the retirement account ends up being the member of that LLC, and the value of the interest that the IRA holds in the LLC may be different from the sum total of the values of the assets inside the entity. So, for example, if your retirement account owns a 5 or 10% interest in the limited liability company, well, in that case, the retirement account can't control anything, doesn't have the ability to demand distribution of its assets or to take any cash out, and so the value of that interest might be less if you wanted to sell it to somebody than the pro rata value of that interest in the LLC. And that's an important distinction, because in that situation, if you wanted someone else some third party to buy your interest, they might not look at the value of the assets inside the LLC to figure out what the value of your unit is. They might actually say, well, it's really not worth the pro rata share because I've got no control. I can't demand that the manager of the LLC do anything particular. So I'll offer you less. And if you go to a valuation expert, a qualified one, you'll often find that the valuation that they come out with in that kind of a circumstance is quite a bit less than the pro rata value that's held of the underlying assets. So sometimes there's 35 to 50% valuation adjustments, sometimes referred to as valuation discounts. And in the estate planning field, these are highly regulated by IRS, and there are specific code sections about those kinds of discounts. Currently under some regulatory revisions to eliminate them. But in the income tax area, those discounts are perfectly valid. There are no code sections that say you can't do it or that they're invalid. So it's important to understand that distinction for a lot of different reasons. And when we talk about when we have to have the valuation, that becomes quite important. So let's go back to the list of questions. So when do I need a professional appraisal of assets, such as real estate held by my LLC? And Yuck, why don't you kind of give a summary of the, if you can, of the guidance that IRS has given to the retirement industry on valuation. Can you elaborate on that?
I can. So the IRS requires us to provide to at least provide to report a fair market value on an annual basis. That's actually going to be reported on Form 5498, which we'll go into a little bit more later on in this presentation. But IRS requires custodians to provide fair market values at least annually, and we report that on that Form 5498. So in regards to a professional appraisal, we at Pensco can't tell you how to go about getting an appraisal or when to get an appraisal or what type of appraisal to get. What we can tell you is that we have to produce fair market values at least annually.
Okay, so what they can't tell you is what I can tell you, though, is that the fair market value of a hard-to-value asset is, again, hard to value. And it is a tremendous burden to have to get a professional appraisal of a piece of real estate, for example, every year. So typically what I suggest to clients is that they give their best estimate, either by talking to a real estate agent or whatever it is, to Pensco about what the current market value is, because Pensco is entitled to rely on the manager of the LLC for that, but not get a professional appraisal until there is some form of income tax event, such as a distribution that's about to come out or a Roth conversion. If you're going to convert LLC units to a Roth from a traditional IRA, that's a taxable event. It's treated as if you'd taken a distribution. You have to report that distribution on your income tax return. If you underreported IRS, if they audit you, they can come back to you and say, well, we're going to impose penalties for underreporting your income plus interest. They might come back several years later and claim that, because that's when you got audited. So it's really important for any kind of a situation where you're reporting income with respect to your retirement account to have a professional appraisal to back it up. And what you do then is you file your income tax return with the income that's being reported from your retirement account, and you attach the appraisal to it. And in that case, it's going to be a lot less likely that the IRS is going to contest the value of the appraisal or of the units that you were actually appraising.
So to kind of to piggyback off of what Frank just said, regarding real estate, if we're talking real estate, this is kind of an example of what Frank was saying. For Pensco to get an annual valuation or fair market value that we report, we'll ask either you go to realtor.com or we could use a tax assessor's market value, or comps from a real estate professional indicating that this is the fair market value based upon these three comps. But if you're going to do a transaction that requires a transaction that's tax reportable, like a distribution or a conversion or a recharacterization, we will ask that you get an appraisal, so we could get so we have a backup to show what we are actually processing and the valuations that we're giving for the taxable transaction.
Yes, and it's also important to know that there are only certain types of appraisers that are considered qualified appraisers. And IRS has a bunch of regulations that say who a qualified appraiser is. And without professional training, your local real estate agent is probably not a qualified appraiser. So when you're reporting actual income in connection with your retirement account, that's when you want to get that qualified appraiser to give you their opinion of the value.
Correct.
So you remember I told you that there were two levels of valuation. So if your IRA holds a piece of real estate directly, all you need to do is get that appraisal or that opinion of value from a real estate agent, and that does fine. And if you have 100% owned LLC, then the value of those assets held inside the LLC pass right on through to the 100% owner. The entity is disregarded in terms of valuation. But if you own a minority interest or some kind of an interest that's less than the full value of the LLC, you may end up being, if you're reporting taxable income on a conversion or something like that, you may end up needing to get the opinion of value of the LLC interest as a business interest as well. So that's just something to be aware of. Naturally, if you're in the accumulation phase of your retirement account, you're likely to report based on whatever information you have available to you, which might be the pro rata value. But when you actually get down to actually reporting a Roth conversion or distribution of limited liability company interests, it's really important for you to get a qualified appraiser to tell you what the value of those interests is. So then the question becomes, well, okay, what do I do if I hold an interest in an LLC controlled by others who don't want to spend the money for an appraisal of the LLC's property? Well, that's a situation that you should hope that you wouldn't end up in, because what happens then is that you're kind of having to make a guess. I've actually had a client who held an interest in a C corporation that was a business, and it was a otherwise closely held business, not publicly traded. And the executives of the company did not want to disclose valuation information to the client, which caused some problems in terms of how they carried the interest in their retirement account. So actually, Pensco does something that kind of helps you in that. You want to talk about that, Yuck?
Related to
that'd be the notification.
Oh, so we do send out notifications to our asset sponsors if we do not have a fair market value or we've not received our annual fair market value. We'll send out notifications to our asset sponsors to let them know that we need this information, and that if this information is not provided, then we are going to unfortunately have to take a look at the client's account. And it might not be that we could hold the account any longer and cause a taxable transaction. So we do ask for fair market values, and we will reach out directly to the asset sponsor. Along with that, one of the first things that an asset sponsor will sign when they are interested in having you as an investor is our private equity investment notification form. And in it, there is a section that they say that they will go ahead and make sure that they provide an evaluation at least annually. And we'll bring that up, and we have brought it up to people and say, you've signed this form, you indicate that you will provide this documentation to us, and we'll hold them accountable to it. So we've got those forms, that letter that goes out annually, and also when on the front end when somebody is trying to do an investment, we make sure that we lay out all the requirements for the asset sponsor when they're taking retirement money into investments.
All right, so there's really two parts to that question. One is who pays for the appraisal, and the other is who provides the information. And what you just found out is that private equity notification form that gets signed at the time that it actually gets submitted to Pensco with your investment instructions, and they won't actually accept the investment until they get it, or they won't fund the investment until they get it from the private equity sponsor. You send that in, and they can sort of enforce it. The next issue, of course, is okay, who pays for it? So you've got the information, you have the right to get the information from the private equity sponsor. Then the question is, okay, who pays for it? And unfortunately, unless there's provisions in the operating agreement or the governing instruments of whatever the entity is that says that the entity is going to get the appraisal for owners, you're going to end up having to pay for that appraisal yourself. So it's just something to be aware of. When I'm talking to investment sponsors who are trying to set up an offering to a number of different people, including retirement account owners, I typically tell them that they should have a separate class of units or ownership interests that are specifically designed for retirement accounts, that accounts for or allows for the fact that some of those retirement accounts are going to want to get an appraisal because they may be relatively soon after they buy the units converting to Roth. So, you know, but the cost of that appraisal should not be charged against the interest of other people who are not individual retirement accounts. So there are lots of ins and outs to that, but in general, it's important to realize that these valuation issues can become fairly complicated, but the fundamental point to remember is that you really need to have a qualified appraiser to appraise the value of whatever it is that's being distributed to you, or your units if you're doing a Roth conversion, because that is going to be a taxable event and it needs to be filed with your income tax return. So, you have anything to add to that, Yuk?
No, I think we're good. I think we've covered all that.
All right. So, then we get to the question of reporting, and so, Yuk, you want to talk about what Pensco needs the valuation information for, and what your general reporting requirements are?
Yeah. So we need the valuation because the IRS requires us to produce to report those valuations to the IRS. It's a method that the IRS decided to use to keep track, and especially nowadays with a special focus on Roth IRA accounts. In fact, I don't know if many of you guys know, but last year was the first year that they introduced a new tax code, the tax code K, which specifically recognizes hard-to-value assets. Prior to that, there was not a specialized tax code for alternative assets, but they implemented it a couple years ago, and last year, I believe, was the first year that we were required to report alternative assets under tax code K. But
what you're referring to there is the code that is put into a box on the Form 1099-R or the 5498, am I right?
Yes, there's a code specifically in the box that needs to go in Form 5498 or 1099-R when transactions or fair market values are reported for hard-to-value assets.
So
Correct.
So IRS gets signaled when they're looking at something that may be an auditable issue,
or something that not standard assets like mutual funds, stocks, or CDs. You know, just standard assets that everyone else deals with.
Okay, so so you want to go into those two different types of forms that get reported?
Yes. So IRS Form 5498 is sent out by Pensco at the end of May. In it, anything that comes into your IRA account is reported. So contributions that you've made, Roth conversion contributions that have been made into your account, recharacterization contributions that have been made to the account. And from there, we have to calculate the account value or the fair market value, and that's reported to the IRS, and a copy is sent to you also for your records to show this is how much I've contributed to my IRA account, or this is how much conversion money has gone into my Roth IRA account. Form 1099-R is, the best way I think of it is out. So 5498, I look at it as money coming in. Any money that goes out of your IRA account is reported on 1099-R. So distributions, required minimum distributions, rollover, surprisingly enough, a lot of people don't realize is reported because the funds are actually leaving. Now transfer, even though it moved, it leaves your IRA account, because the transfer is like-to-like plans, the IRS doesn't consider that a taxable reportable event. But a rollover is considered a taxable event and was reported on 1099-R. Prohibited transactions are reported on 1099-Rs. The removal of excess contributions, the recharacterization of the money coming out from one account being recharacterized is reported on 1099-R. So you'll get an offset when you do a recharacterization. You'll receive a 1099-R for the money going out and the 5498 going into the new account. Same as a Roth conversion. If you're doing a Roth conversion, the money coming out of the traditional IRA is reported on a 1099-R, and then the Roth conversion money coming into the Roth IRA account is reported on Form 5498. So the IRS requires custodians to report those transactions. That's why we got to have fair market value, because when we're reporting the 1099 money going out, we can't just assume, oh, this asset, this private LLC was worth $100,000 3 years ago, so we're going to keep it that way. The IRS wants to know how much is taken out so they know what to tax you at, or whatever tax, what this does, what kind of implications it has for your taxes. Just like they want to know what's in your IRA account when money comes in, and to be able to look at, say, something like what Frank was saying, a red flag to be able to say something, well, your Roth was valued at $50,000, and all of a sudden in 1 year with no contribution, it's worth $500,000. So those are some of the reasons why the IRS wants us to be able to report the fair market values.
Okay, so can you go over the time frame when you need to get that valuation information?
Mm-hmm. So Pensco, what we do is we will send out notifications for private equities beginning of January is what we try to do. And from there, we give 60 days to try to get valuations. And then for real estate, so we try to get the valuations for all our private equities by the end of February, mid-March. For real estate assets, we'll usually send out a notice to our clients indicating that we need to get fair market value for real estate somewhere in the beginning of February. Sometimes it's been pushed to March. And again, we give 60 days for the clients to go get some type of either appraisal or documentation to show what the fair market value of the real estate property is. And we try to get everything done by May 31st, because that's when the 5498s have to be filed. And I can tell you, normally Pensco will ask for extension just because of just the amount of 5498s what we have to do for 30 days. We try to do our correct and get everything filed by the end of June. So we try to get all our information so that we have proper valuations and we can report proper fair market values for your 5498s that go out at the end of May.
Okay. So then we can move on to the question of unrelated business taxable income. And not everybody ends up having to report unrelated business taxable income. Just to review, that comes from business profits that are not otherwise exempt from the tax. If you have income that is not related to the reason why you are exempt from tax, then you have unrelated business taxable income. And in fact, all income to an IRA is unrelated business taxable income, because it's a tax-free entity, but it doesn't have a charitable purpose. So all income that comes in is unrelated business taxable income, but much of it, and frankly most of it, is exempt from the tax. So the exemption from the tax would include rents, it would include interest receipts, it includes gains from the sale of property held for investment, and a lot of things like that, royalties, that kind of thing. So most of the income that's held in retirement accounts and self-directed retirement accounts, because a lot of it's related to promissory notes and real estate, ends up being exempt. So there's no reportable unrelated business taxable income. But if you purchase the property with a promissory note from a bank or something like that, assuming that it's non-recourse debt, if you've purchased property with some leverage, then retirement accounts, individual retirement accounts, end up having to pay tax on that portion of the income, even if it's otherwise exempt, that is leveraged. So if you have a 60% loan, then 60% of the income can be subject to unrelated business income tax. So the question then is, all right, suppose I do have to report unrelated business taxable income. How does that work? So, does Pensco prepare those returns?
Pensco will not prepare those returns. We will file the returns, but we don't prepare the returns. That's something that we ask that you talk to your tax advisor or CPA to actually prepare the 990Ts. Once the 990T is completed, they are sent to Pensco. We do want them by April 1st because the unrelated business income tax, or UBIT, has to be paid out from your IRA account. So once we get your 990T completed, we will go ahead and file it on your behalf, because the IRA has to be the one that pays it, and we'll sign off on it, and we will go ahead and forward the 990T along with the payments. Now, the thing is, for Pensco, is one of the requirements that we have when we file a 990T is that your IRA has to get its own unique tax ID number. Currently, the way how all the assets are set up is they are reported under Pensco's overarching trust tax ID number. So if John has a real estate property and Jane has an LLC, it's all under our tax ID number. But because for UBIT, we have to file, Jane might not have any taxes associated, UBIT tax associated with it, while Jack does for his LLC. We need to distinguish that. So we ask that you have to set up your own tax ID number, which you could go onto, I believe it's SSN or someplace. And Frank, you might know this better. I can't remember what the specific website is.
Well, let's see. The IRS has a specific website that you can use to apply. We've run into some problems with IRS applying online, because for quite a long time after they had that hack a year or so ago, they were in the process of updating their systems. And so if the system wasn't prepared to accept what you put into the system, to the inputs in a simple way, it got rejected. So you ended up having to file it by fax. And explaining what you were doing with a letter, and sometimes they responded quickly and sometimes they did not. They've improved that quite a bit. And, you know, we ended up in some cases, like a lot of times banks say, I want a tax ID number for your LLC, and then if you apply for a tax ID number for the LLC, they want the tax ID number for the responsible party. And there was a long time when I was a little confused, and I think a lot of others were confused on who the responsible party is. Well, it turns out that the form on which your individual retirement account contract is based is an IRS form, and if you read the that's elaborated a lot by the custodian, but it has specific provisions that are prescribed by IRS in a form. And if you read the instructions to the form, it says that unless you are filing a Form 990T to report unrelated business taxable income, the taxpayer identification number or the Social Security number of the account owner will suffice. So for all purposes other than reporting an income tax because of unrelated business taxable income, if we're applying for a tax ID number for an LLC, we're probably going to use, unless there's going to be unrelated business taxable income, we're probably going to use the IRA owner's Social Security number as the responsible party, even though that sounds kind of odd. But recently, for example, we had someone who invested their money through an LLC, and they are now going to have unrelated business taxable income. So we are applying for a tax ID number, a separate tax ID number for their retirement accounts, so that we can start the reporting when it's time to do that.
Exactly. So once you get the unique tax ID number for your IRA when you file your 990T, you'll go ahead and complete your 990T and then submit that to Pensco. And then from there, Pensco will file it for you, because again, the 990T is paid by your IRA, and payment for your taxes will come out from the IRA account.
Right. So it's really important to notice that you're responsible for preparing the return, you and your accountant, but you can't sign the return and you can't pay the tax. It has to be signed and paid by Pensco from your account. So the next question I often get is about Form 1065. Now, this last question on the page here, should I send the annual IRS Form 1065 for my single member LLC to Pensco, is a trick question because there is no Form 1065 for a single member LLC. IRS doesn't want Form 1065. Single member LLC is a disregarded entity, and the owner of the entity is supposed to report the income from the LLC on their personal income tax return. Well, if you're an IRA, and if your IRA owns 100% of the interest in the LLC, there is no reporting. It may be that when you, in the first year or so after you've gotten your tax ID number for the LLC, IRS wants to know, hey, how come I don't have a 1065 from you? Well, it's easy to answer. You can send a letter saying it's a disregarded entity. So this is kind of a trick question. On the other hand, with a multi-member LLC, you do have to prepare, the LLC does have to prepare a Form 1065, which is the annual return. That's an annual return of a partnership. If your LLC is being taxed as a partnership, and most of them are, then you have to file Form 1065. So what you do then is you have to prepare the form. The LLC and the manager of the LLC signs it, sends in Form 1065 to IRS, and 1065 requires that each of the members of the LLC get a Form K1. K1 is used by all pass-through entities or in a lot of trusts to identify for each individual owner or beneficiary of the trust what their share of the income is and how to report it. So what happens then is that if you have unrelated business taxable income inside the LLC is supposed to prepare the Form 1065, if it's a multi-member LLC, and identify unrelated business taxable income for the IRA owner. So it's really important to coordinate with the tax preparer of the entity each year so that they know exactly who it is that they're supposed to report the income to. Okay, anything to add on that, Yuk?
Yeah, just one other thing is the K1 that's filed, even though the IRA is the owner of the LLC, or Pensco does not want the K1. We rather have that sent directly to you because, again, we're not the one that's going to be filing the 990T, and so we just don't want the K1 sent to us. We do get K1s, and we normally forward them on to the underlying beneficial owners. But if you're setting one up or you have set one up, if you have the K1 sent directly to you, that would be better.
Yeah. So you have the entity send you the K1. You prepare the Form 990T. You'll probably attach it to the Form 990T. Am I right, Yuck?
We just want the 990T.
Yeah, okay. So
we don't even need the K1.
All right. So, but that's what you use to prepare the 990T.
And I don't know if people know this, but sometimes you might have a negative balance on there, a credit that actually could be used to your credit for your 990T. So sometimes people see a negative credit and they don't think to file a 990T, but it might be something that you want to talk to your tax advisor about, but it might be beneficial to even file it so that you receive credit that could be used for future payments that you might have.
Yeah, so if your IRA has unrelated business taxable income next year, they can offset the tax on that, or they can offset the loss that they had in the prior year. They can carry forward the loss. They can't apply the loss to any other investment, and of course you individually can't apply the loss to your individual investments, but it can be a great help if it turns out that the entity starts to be very profitable in later years. You can carry those losses forward and apply them. Okay, anything else, Chuck?
Nope, I think we covered that.
All right, so let's go on to account maintenance. Pensco is a bank. And I guess I should, as a footnote, say that Pensco was purchased by a bank in last spring. Am I right, Yuck?
Correct.
All right, so Pensco is a bank that's owned by a bank, and so it is subject to banking regulations. So can you comment on what effect banking regulations have on how Pensco keeps its files, if any?
Yes, yes. So we do get audited annually. Currently, we get audited annually by the Colorado Banking Division, because we are in Colorado. That's our home state. So we get audited. In fact, we went through an audit in August for it, and we should be getting another audit in 2017 around the same time. So in it, we do have to make sure that we have a client identification program, know our clients, who they are. We do double check our like our OFAC reports, different reports that we get to make sure that there's nothing illegal going on. So we are regulated in that sense, that just like a bank is, where when you go in to open up a checking account, they're going to ask you questions. They're going to ask you for your social security number, your date of birth, a physical U.S. address, and not just a PO box. We have the same standards at Pensco because we are a non-depository bank.
Okay, so then we have interested parties on the accounts. Do you want to comment on what Pensco discloses to those people?
Mm-hmm. We can go ahead and provide transaction history. We can provide statement history to people, but we cannot transact on an interested party's request. So if you have an interested party on your account, they're entitled to receive account information, transaction information, if a contribution was made, if so-and-so, if the payment was made from your asset sponsor or your investment. But if they were to say, okay, then now that you got the cash, go ahead and distribute $5,000 to my client, we won't do that. An interested party doesn't have that kind of right.
Right, so if a client becomes disabled, though, what do they have to do in order to give Pensco instructions? Whether they're distribution instructions or new investment instructions or like that.
Normally, for that, if a client becomes disabled, they will have. Usually, they'll have. It depends on how it's done. There's different avenues that you can go. You could either have a court intervene and provide a guardianship or conservatorship paperwork, appointing somebody conservator or guardian of your estate. Not just a person, but it has to be of the estate. Or you could have what's known as a power of attorney that you willingly give to somebody and say, this is my attorney. In fact, they're the ones that represent me, and that you can take instruction from them just like you're going to take instruction from me. But with the power of attorney, you have to make sure that that power of attorney has the ability, or lists out the ability for the client to transact on your accounts, your bank accounts or your retirement accounts, for your benefit. And this, again, want to talk to the attorney about this, but normally we want to get a general durable power of attorney, something that allows somebody to continue to act as your power of attorney if you become disabled or mentally incompetent.
Now, does Pensco have a form for general durable power of attorney?
We don't have a form for a durable power of attorney. We do offer what's known as a limited power of attorney that we have, that people have completed, that gives authorization that you give authorization to someone specifically for distribution purposes. So we do have that on our website at www.pensco.com. So that person could go ahead and request a distribution on your behalf. That specific limited power attorney isolates the power to be able to make a distribution request on your behalf. They cannot change anything else. They can't even do trading. We do have a separate trading limited power of attorney that could be completed, that you could designate somebody to have the authorization to transact on your account. But that's for general. That's for what we call standard assets like mutual funds or stocks, but not for alternative assets.
Okay. So suppose someone then dies, and everybody knows that they need to have a designated beneficiary in their retirement account. How does a designated beneficiary get control of the account for their own purposes?
So if we have a designated beneficiary on file, what happens normally is we get notified that somebody's passed away. We'll request an original certified death certificate, original or a certified copy of the death certificate. With that, once we get that, we'll code the account as deceased, and we will go ahead and identify the designated beneficiaries, and we will send a letter out to the beneficiaries, letting them know that you are listed as a beneficiary on this account, and these are your options that you have for this account. Along with that, you will receive a form that allows you to either do a distribution or inherit that, or roll it over, or not roll over, but to move your segregated amount into an inherited IRA, or depending on the relationship, if you're a sole spouse beneficiary, your beneficiary will be allowed to do a spousal assumption.
Okay, now one of the more interesting things that is becoming more and more plain, particularly in the estate planning area, is the issue of digital assets. So, and your login and your ability to get to your account and all that stuff is a digital asset. So I assume, Yuck, that Pensco actually, if you get notification that someone has died, you turn off that account. Am I right?
Correct. We'll disable the username and password from that point on, because that person who actually had the rights to it no longer exists. Just like a power of attorney, if the moment that the principal passes away, the power of attorney is no good. Just because you're a power of attorney for John Doe, but John Doe passed away, your power of attorney ceases. And that's the same way that we look at what you're talking about, the username and passwords, is that access, the web access, was specifically designed for John Doe, and once John Doe passed away, they are no longer active.
What about those interested parties? Do they lose access too?
The interested parties, because they were designated by the client, their designation no longer continues on. Because
right.
So not the client's account any longer, it's the beneficiary's accounts.
So it's really important, and I would just want to make this really clear, it's really important that the ownership of those digital assets is made very clear in your own estate plans. There's actually a service that is working with a lot of the institutions and that kind of thing, and you can start storing all of your digital accounts with them. Now, you don't store passwords, so they don't get access to them. But what happens is that if your executor or trustee notifies them that you have died, they notify all the institutions and identify the particular person who is to have authority with respect to each account, so the institutions can rely on that. There's actually a uniform law and a federal statute on it. So have you run into a lot of that lately yet, Yuck?
You know, we have not gotten that. We currently still deal with the certified death certificates, and once we get notification of that, that's when it's disabled on our side.
Okay. Right. So you know, one of the biggest problems that your executor is going to have is, how do I get access to these accounts? And if that's all taken care of beforehand by you, because you did that and the institutions are notified and they're part of the program, then it makes it a lot easier. Just something I wanted to point out. So, one other question, and that is that it's quite possible that our clients are going to find that they have offers of investment for their retirement accounts in limited partnerships and other offerings. Pensco has a process for I won't say authorizing, but pre-accepting investments. Am I right?
Yeah, what we'll do is we'll do a review for administrative feasibility from an asset sponsor if they've asked us to do it, to see if this is something administratively feasible that we'd be willing to accept. So in that sense, a majority of the paperwork is already done on the front end of it. And then from there, when people want to invest, it's a little bit more streamlined, just because we've received a lot of the paperwork in advance, and a lot of the administrative review has been done in advance, that we're just looking for specific deals related to you personally as the investor now, and not the overarching you as the investor and the investment and everything else.
Right. So that makes it easier for people who are preparing offerings to multiple people with retirement accounts to get their offering reviewed by the custodian. And it, because somebody like Pensco, because Pensco has this kind of a process, it does mean that the sponsors are likely to use one custodian for their self-directed retirement account investors, and recommend that their investors send their retirement account to that one custodian. That way they don't have to deal with a whole lot of different custodians asking them for information about their offering. So what key points does Pensco look at when they're reviewing that kind of an investment?
That's proprietary information that we don't share, to be honest with you, Frank.
Oh, okay. All right. But you're basically looking to make sure that it's administratively feasible, and that there's not some kind of form of prohibited transaction involved in that kind of stuff as well.
Yeah, we look for administrative feasibility, and the paperwork that the asset sponsor signs, like a private equity investment notification form, lists out different aspects that we want them to acknowledge, and along with that, and some other stuff that we have proprietary information about.
Okay. So let's talk about the annual calendar. It starts, of course, in January, but the first major event that occurs is on February 1st, and that's when Pensco sends the 1099-R to each account holder. All right, so that allows you to use your 1099-R if you've had distributions and that kind of thing to prepare your individual tax return. And then, of course, Pensco files all of the 1099s at the end of February. Now, are those extended to like the 5498?
That I don't know. That's done by a regulatory department, and unfortunately, I don't have that information right off the top of my head. I can get that information for you tomorrow, though.
Okay. Well, and then, of course, any LLC that's filing a Form 1065, they've got a due date of March 15th. That can end up going on extension, but the reason for that is because the members need to be able to report the income from it. So that's the responsibility of the LLC managers. Then March 31st is a key day, because that is the last day to report investment values. And we had a conversation yesterday, Jaak, where Pensco would like both real estate and LLC values to be reported by that. All right.
We tried, like I said, we tried to get it in as quickly as possible. If we could get everything in by March 31st, that's great. But sometimes depending on the volumes of work that we have for year end, we might extend that out a little bit further. But from the time that we send the notice, we give a 60-day notice to get valuations for real estate and for private equity.
And remember that their deadline is May 31st unless it's extended.
Exactly.
So if you have reached age 70 and a half in the prior year, and your first minimum distribution is due as a result of that, then that is due by April 1st. And the responsible party for making sure that takes place is the self-directed retirement account owner. Now, Jaak, I don't know if you're familiar with this part of it, but do you know what Pensco does to notify self-directed retirement account owners if they've reached that age, what their minimum distribution requirement is?
We send it out with our fourth quarter statements to remind people that if you've turned 70 and a half If you have turned 70 and a half the prior year, you got till April 1st of that year to take out your first RMD. We'll send it out with our statement notices. We'll also post it on our website. And if you need to know the dollar figure, you could call Pensco and we will provide that information. We've also sent out notices to clients throughout the year. If you haven't taken your RMD out, required minimum distribution, we'll let you know what your Pensco portion is. Now, just to clarify a couple things about RMDs is the RMD, if you have, say, 3 different traditional IRAs and 3 different custodians, you are allowed to take one lump sum, or you could take out a portion of it from different IRA custodians, as long as it your RMD withdrawal is the aggregate total value of your required minimum distributions for across all your IRA accounts. So just because you receive a notice from us doesn't mean that you have to take it from us. You could take it from another IRA, traditional IRA that you have at another custodian that you might have a cash value of, and you might have real estate value here at Pensco, and you're like, I don't have the cash to take it out, so you take it out from another IRA. So if you get something from us saying you have to fulfill your required minimum distribution, make sure that you haven't done so already from a different account.
Yeah, and now here's where it does get somewhat complicated, because remember, those assets in your IRA are hard to value assets. And so if you haven't actually had them appraised by a qualified appraiser prior to that time, you've been putting in individual values, etc., that is the time when you want to make sure that you update the value for Pensco so that the actual minimum distribution for your retirement account can be accurately calculated, because of course you don't want to file your income tax return on the basis of a minimum distribution that is undervalued, because you could end up having some interest and penalties later on. Also, again, April 1st is the time when the Form 990T has to get to Pensco for their signature and filing. And the responsible person for that is the self-directed retirement account owner. And then, of course, April 15th is the filing deadline for the Form 990T, and that's what Pensco does. They file that. Do you ever end up getting those on extension?
We have, but that's normally the request by the account owner.
Mm-hmm.
They have to notify us that they want us to file an extension, and we'll go ahead and do that.
Okay. And don't forget that April 15th is also the last day to make contributions to the retirement account for the prior year. And then, of course, May 31st is the last day to file the Form 5498 to report the account value, unless, of course, it's on extension. One thing I want to remind everybody, and we'll get to the second part of the year shortly, but I want to remind everybody that there is an annual filing requirement for all LLCs in your state of organization. We'll take care of that for you, but just so you are aware that on the anniversary of the filing of your LLC to begin with, typically that is when many states require you to file an annual report. Some states are not the same. For example, Delaware is a little different, but just so you know that that's something that needs to be taken care of. Otherwise, if your LLC goes out of existence, you could end up with a prohibited transaction. So, September 15th, that is if your Form 1065 for a multi-member LLC is to be filed, that's the last day on which it can be filed. It's a month before the individual filing deadline for individual returns, so that people can get their returns out. Then, of course, October 15th is the filing deadline on extension for 990T, and your Form 1041 filing deadline is also October 15th. So at the end of the year, many people beginning in the fall start thinking about, do I want to convert my traditional retirement account to a Roth? Is this the time when I want to take the income so that I get accumulations in the Roth going forward, and I don't have to worry about taking it out as ordinary income. So what actually is the last day, Yuck, for filing a Roth conversion?
To do a Roth conversion, the last day is December 31st, or the last day of the year, and the conversion actually has to take place that day. You can't just send in a request, just like for IRA contributions, for prior year contributions, they just have to be postmarked by April 15th. For conversions, you have to actually process it. So if you send in a Roth conversion form on December 30th and it's postmarked December 30th, and we don't get it until January 3rd, you've missed your time for that year to do a conversion.
Right. So this is really a very important point. It's fairly easy to convert a Roth, a traditional IRA that has traditional investments in it, publicly traded securities. But if you have, if your retirement account owns a piece of real estate, it isn't necessarily easy to convert in a short period of time. So, Yuck, you want to talk about that?
Yeah. So for real estate property or even private equity, depending on, we are at the mercy of the county for real estate properties specifically. So if we prepare a deed, and you say you wanted to go ahead and fund the real estate property to a Roth, and you're willing to pay the taxes this year because you had a low income and you're willing to, and you feel like, tax advantage wise, this is the best thing to do. We have to prepare the deed. We have to send it out to you to get to. We have to send it out to the county to get it recorded. At that point, we're at the mercy of the county. Depending on how busy the county is, sometimes we've seen a turnaround within 2 weeks. Sometimes we've seen a turnaround in 3 months. It all depends on where the property is located, how quickly the county is able to do it. But the transaction has to take place by December 31st. That's why we ask, if you're going to do a conversion, a Roth conversion for real estate property or assets, because again, we're at the mercy of the asset sponsor to notify us and say, okay, this transaction, we have re-registered this asset from the traditional IRA into the Roth IRA account. That's the way it's in our books now. We got to get that information. We've got to get that confirmation before we'll do the transaction.
Okay, and it's even more critical for if you want to recharacterize a Roth conversion from the prior year.
Correct, because the recharacterization, or if you're going to do a removal of excess contribution for that year, because recharacterization, once it's done, it's done. That if you miss that October 15th date, you've missed the recharacterization window. So, and then you would have to, if you weren't eligible to make a contribution to a Roth and you're trying to recharacterize it, your contribution to a traditional, then you're at a point where you're doing a removal of excess contribution instead now, with penalties associated with the over contribution that you've done. But we've got to get everything processed by the October 15th date.
Right. So that means that they really need it by August 1st.
Correct.
Or if it's the end of the year, by September 1st for conversions themselves.
Correct. It just gives us a window for us to be able to say depending on what the asset sponsor does or the county, it gives us a fair amount of window that we can actually work at it and get it done before those deadlines.
Okay. And then one thing I like to remind people of is that if you're taking out minimum required distributions from an IRA, you have to do it by December 31st. There's no April 15th or April 1st date, except in the first year after you're 70 and a half. I like to point that out. So now it's time for questions. I'm going to unmute everybody to see if there's any questions from somebody. Anybody have any questions? And you can you can mute yourself again if you want to. All right, well, I'm not hearing anybody say they have a question. So again, I'm just going to ask, is there anybody who wants to ask a question about anything that we've covered today?
Frank, I have a quick one.
Mm-hmm.
You mentioned, or he mentioned, that the Pensacola needs the annual value, fair market value report to the IRS. So for a single member LLC that owns a condominium, can you use the assessed value that the county has given you for that as your so-called appraisal?
Yes, that's evidence of what the real market value is, unless you're going to be reporting some kind of a taxable event. So,
Okay.
so you know, if the county is assessing properties on the basis of fair market value, that's reasonably good information about what the fair market value is. But if you're going to be reporting taxable income in connection with that property because you took a distribution or because you did a Roth rollover or something like that, then
You'd want an appraiser or somebody.
You'd want an appraiser, a qualified appraiser, to give you an opinion as to what the actual value is.
Okay, thank you.
Anybody else? Okay, well, Yuck, I want to thank you very much for attending this and giving us all this great information. Please say hello to Mr. Merritt, and have a good night, and good night to everyone. Call me tomorrow or any other time if you have any questions. That's right. You have that first call right anyway. So thank you all very much, and have a good evening.
Thank you.
Appreciate it.
Thanks.